The USA's biggest toy maker has announced plans to expand their domestic factories by 50% as the tariff wars are sparking more demand for made in the good old US of A. This, coupled with over $1 trillion in announced investments from people like Apple, Saudi Arabia, and Taiwan's semiconductor manufacturing company, the stars appear to be aligning for an economic boom heading our way. So what does all of this mean? Well, to start, let's take a look at Cra-Z-Art, the toy maker's breaking news announcement of massive investments into the US. This is by Lisa Fickenshire. What a name. And the article is titled US's biggest toy maker to expand domestic factories as tariffs spark demand for made in USA goods. Lisa writes, the biggest toy maker in the US is enlarging the footprint of its 2 domestic factories by 50%, a response to surging demand from retailers as Trump's tariffs threaten to raise costs. Cra-Z-Art, New Jersey-based arts and crafts company, is investing millions of dollars to add more than 500,000 square feet to its factories in Tennessee and Florida, despite a lack of clarity on whether tariffs will rise, fall, or spark a recession after the U.S. imposed a 20% levy on goods from China, according to its owner. Cra-Z-Art chairman Lawrence Rosen said he's responding partly to retailers who fear the tariffs will squelch consumer demand as basic necessities become more expensive. While Rosen declined to name specific retail customers, Cra-Z-Art goods appear on the website of major chains including Walmart, Target, Amazon, and Walgreens. Rosen said, "We are getting a tremendous amount of pressure from them because they are concerned about keeping the pricing competitive. We are protecting our customers and ourselves." Big box chains see domestic manufacturing as a way to de-risk against the tariffs, according to Rosen. The retailers have promised Rosen that if he makes more products in the U.S., including its Softy Dough, massaging foot spa, sidewalk chalk, and spiral art sets, they will buy more. In response, the 102-year-old family-owned company, which makes art sets, slime, markers, paints, pencils, and puzzles in the U.S. and in China, has spent the past month shipping manufacturing equipment, including plastic molds, to the U.S. from Asia. "We are moving a large percentage of what we have here in China, duplicating some machinery and investing in high-speed automation equipment. When Trump announced the tariffs on China, it's been full steam ahead. I'd rather control my own destiny than be subject to the ups and downs and the daily changes to tariffs." Now, Cra-Z-Art, the New York Post writes, already makes about 35% of its products in the USA, including pencils, jigsaw puzzles, storage boxes, crayons, and markers. And now it's planning to increase its domestic production to at least 45%. Rosen estimates that his investment will double the company's revenues to $400 million within the next 2 years, but he also aims to goose profits by saving time and money. Now, as of now, the New York Post writes, the vast majority of toys are made in China, where the costs of labor remains low at between $3 and $4 an hour. And Rosen would go on to talk about the need for automation in the U.S. to offset the higher pay. So, that is the New York Post. That is a colorful dough. Man, wish we had that as a kid. And this is just the latest in a string of investments coming into the U.S., all because of Donald Trump's presidency. And I say this because thanks to his tariff wars, trade policies, and his America First agenda, big companies, big corporations are moving fast to build up their onshore production. They don't want to get screwed by Trump down the road. Let me give you some examples here. Let's start with Taiwan, the Taiwan Semiconductor Manufacturing Company, or the TSMC. On March 3rd, they dropped a bombshell for the news media and Democrat Party. They announced a $100 billion investment to expand chip manufacturing in the U.S. This move was tied explicitly to dodging Trump-era tariffs. It was all about the trade pressures. They made it clear that this was a serious recommitment to producing on American soil. This isn't just a factory being built in the U.S., it is a seismic shift for the semiconductor supply chain. This is important, and it foreshadows what will likely be a renaissance for U.S. production on the home front. Then there is Apple. Around late February, they broke the news via Zero Hedge that they too were planning a $500 billion investment in the U.S., which will include 20,000 new jobs. Now, $500 billion is massive even for Apple, and it is unclear if this is a firm pledge or a long-term vision. Still, the sentiment reads loud and clear. Apple, too, is leaning into the Make America Great Again, made in America. Then there is Honda. On March 4th of this year, they announced that they are shifting production of 210,000 Honda Civics, which are annually built from Mexico now, and they're going to shift them here in the U.S. So this is all going to be relocated from Mexico to the USA. And this means that roughly around $6 billion worth of Honda Civic vehicles are going to be created in the US now yearly. Then you have Siemens. On March 6th, the AP reported a $285 million investment in U.S. manufacturing. Siemens is a German multinational conglomerate headquartered in Munich. They have announced that they're going to be building factories in Fort Worth, Texas, and Pomona, California, with an eye for churning out electrical equipment. Think circuit breakers and power panels. These are all designed for commercial buildings, industrial sites, and AI data centers. And there are others as well, but this gives you an idea of the trend that's happening now. These investments total into the hundreds of billions of dollars, in fact, even over $1 trillion. And they span manufacturing, tech, and infrastructure. It's not all going to take place overnight, mind you, but the impact is on the horizon, and that will mean a huge boost in the US economy. So, when you couple this with the high likelihood of Canada and Mexico folding like wet noodles on their trade wars in the near future, as their mutual economies will not long be able to take the punishing hit of large tariffs on their number one export, USA, us, we can expect to then see a large economic boom coming to the US. It's not guaranteed, but Donald Trump has had a knack for getting his way with the power of the presidency behind him. As I mentioned in a previous episode on Canada and tariffs, the US effectively has Canada by the short hairs when it comes to any kind of trade war that we want to take seriously. You see, Canada sends approximately 75% of its total exports to the United States. That is roughly 25% of its GDP. By comparison, the US sends only 18% of our exports back to Canada. And worse still for the Canadians, this 18% that we send back to Canada represents less than 2% of our total GDP. The damage that Canada will inflict upon itself with this trade war will be astoundingly higher than it will be for us here in the US by an order of magnitude. And by the way, when it comes to the Canadian steel and aluminum with Trump's 50% increase in tariffs here, it's going to effectively slash Canadian revenues, while US producers will simply pivot to domestic or foreign suppliers with much less notable economic pain than Canada will receive in response. We here in the US can easily absorb such tariff-related price hikes from Canada, while Canada, with a population 1/10 the size of us, also has a dramatically less diversified economy. They're not going to have the ability to handle a prolonged trade war and will end up suffering severe unemployment. They're going to get currency depreciation, which we're already starting to see now, and eventually inflation, which would be catastrophic for the Canadian citizens. So I would almost expect to see a repeat of the Trump economy that we saw prior to the pandemic. You know, the one that was chugging along at growth of over 3% GDP up until the pandemic crash, of course. My advice to anyone watching this would be not to get yourself too wrapped up in the day-to-day blows. Now, the media drumbeat, of course, is all about recession, recession, recession. But I don't think that's going to end up being the case. There might be short-term pain, that is a possibility, but I think a massive economic boom is right around the corner. And something tells me that we will likely be seeing all of this again real soon.